Let me ask you something. What if I told you the stock market has quietly created more Canadian millionaires than real estate, tech jobs, or side hustles, and the only reason you're not one of them is because no one ever showed you how it works? You're either building wealth right now or watching others do it without you. And if you skip this video, you might miss the most important financial decision of your life. Welcome to Financial Mo, the place where real Canadians come to finally understand how money works. Today we're unlocking the stock market in plain English. Not boring textbook definitions, not Wall Street jargon, but the actual real-life roadmap for how Canadians can start investing from scratch, even with $50. Whether you're 19 or 59, this video will give you the tools to build wealth that grows while you sleep. We'll cover the basics of how stocks work, how to open your first investment account, what to invest in, even with zero experience, tax advantages unique to Canadians, TFSA, RRSP, FHSA, mistakes that make people lose money, and how to make your first investment confidently. By the end of this video, you'll know exactly what to do next. No more excuses, no more confusion. Chapter 1. What is the stock market? Really? The stock market isn't a casino. It's not gambling. It's not magic. The stock market is where ownership is bought and sold. When you buy a stock, you're literally buying a tiny piece of a company. If that company grows, you win. If that company makes money, you earn a piece. Imagine owning 0.00001% of Apple, or TD Bank, or Shopify. That's what you're doing. But more importantly, the stock market is a wealth engine, one that's been quietly growing money for those who understand it. Historical average return? The S&P 500, which includes the 500 biggest companies in North America, has averaged 8%, 10% annually long-term. That means if you invested $1,000 and never touched it, in 40 years it becomes over $21,000 without doing anything. Multiply that by 20 years of contributions, and now you're talking real wealth. Chapter 2. Why most Canadians stay broke. The system doesn't want you to invest. It wants you to consume. Credit cards, monthly payments, buy now, pay later, keeping your savings in a 0.5% interest account. That's how banks get rich, not you. But here's the scary truth. Every year you delay investing, you lose tens of thousands in future wealth. You think you're being safe, but the truth is, not investing is the riskiest move of all. Because of one thing, inflation. Chapter 3. Inflation, the silent wealth killer. Let's say you keep $10,000 in a savings account earning 1%, but inflation is 4%. You're actually losing 3% per year in purchasing power. That $10,000 will buy less every year. Groceries go up, rent goes up, but your money, it just sits there. Investing is how you fight back. Chapter 4. Types of investments. Simple overview. Let's keep this stupid simple. There are 4 main things you can invest in. Stocks. Ownership in company ETFs, exchange-traded funds, bundles of stocks, bonds, loans to governments or corporations, REITs, real estate investment trusts, own property without buying homes. As a beginner, 95% of Canadians should start with ETFs. Why? They're diversified, low-fee, and don't require stock picking. Think of ETFs like a basket of fruits instead of betting on one apple. Chapter 5. Tax-sheltered accounts. TFSA versus RRSP versus FHSA. This is where Canadians win. You don't just invest in stocks, you invest inside a tax-advantaged account. TFSA, tax-free savings account contribution limit in 2025, $7,000. No tax on growth or withdrawals. Perfect for long-term investing. RSP, registered retirement savings plan. Contributions reduce your taxable income. Growth is tax-deferred. You pay tax when you withdraw in retirement. FHSA, first home savings account. Best of TFSA plus RRSP tax deductible in. Tax-free. Use it to buy your first home for beginners. Start with a TFSA plus ETFs combo. Then add RRSP if your income is $70K plus. Chapter 6. How to open your first investment account, step by step. You don't need a financial advisor. You don't need $10,000. You need a phone and 15 minutes. 1. Choose a Canadian platform. wealthsimple, Questrade, Trade, TD, direct investing if you prefer bank linked. 2. Select account type. Start with TFSA, add RRSP later. 3. Fund the account. Link your bank and transfer any amount, even $100. 4. Buy your first ETF. Search VEQT or VGRO. Click, buy, choose, market order, enter amount, confirm, boom. You're an investor now. Chapter 7. What to invest in. Beginner ETFs for Canadians. Start with these. VEQT. 100% global equity. Stocks. VGRO. 80% stocks. 20% bonds except. Similar to VEQT, from iShares, ZSP, S&P 500 in CAD, these are diversified, low-fee, and have historical long-term growth. Don't try to pick winning stocks when you're new. Let the ETFs do the work. You're buying the market, not betting on one company. Chapter 8. The magic of compound interest. If you understand this section, it will change your life. Compound interest is the most powerful force in personal finance. It means your money earns money. Then that money earns money. And the cycle continues forever. Example, you invest $500/month starting at age 25. At an 8% return by age 65, you'll have over $1.50 million. Now let's say you start at 35 instead. Same $500/month, same return. You'll only have $680,000. That's the cost of waiting. Over $800,000 lost just by delaying 10 years. Chapter 9. The 7 biggest mistakes beginners make. Let's help you avoid the traps. 1. Trying to time the market. No one can predict highs and lows consistently. Just start and stay in. 2. Stock picking too early. Beginners chase hot stocks like Tesla or AI companies. 90% lose money. Start with ETFs. 3. Listening to TikTok gurus. If someone promises you 50% returns with zero risk, run. 4. Ignoring fees. Mutual funds often charge 2% plus. ETFs charge 0.2% or less. Fees destroy long-term returns. 5. Overchecking your account. Checking daily leads to panic. Think in decades, not days. 6. Not investing inside TFSA RRSP taxes will eat your gains if you don't use these accounts. 7. Falling for FOMO and YOLO. Crypto hype, meme stocks, penny stocks, all distractions. Chapter 10. Dividends. Free money. While you sleep, dividends are cash payouts from companies just for owning their stock. Example, you buy 100 shares of a Canadian bank stock like TD. TD pays you 96 cents per share quarterly. That's $96 every quarter just for holding it. Use dividend reinvestment plans, DRIPs, to reinvest those payments and boost your long-term gains. Great Canadian dividend stocks. TD Bank and Bridge, Fortis, TELUS, BC Canadian National Railway, or buy dividend ETFs like VDY Canadian High Dividend Yield, XEI, iShares Canadian Select Dividend. Chapter 11. The Psychology of Investing. Most people lose money not because of the market, but because of their emotions. Market crashes, they panic, sell. Market booms, they buy in at the top. Then they blame the system. The stock market rewards patience and punishes panic. Here's how to stay sane. Tips for investing psychology. Only invest money you don't need for 5+ years. Automate your contributions monthly. Don't look at your portfolio every day. Remind yourself, downturns are normal. Stay diversified. You're not betting, you're building. Chapter 12. Building your beginner portfolio, Canada. Here's a simple example anyone can follow. 3-fund Canadian portfolio, VEQT, global stocks. 70% VCN, Canadian index, 20% VEB, Canadian bonds, 10% or just go 100% VEQT if you're under 40 and can handle risk. Rebalance once a year. That's it. Chapter 13. Real Canadian Case Studies. Case #1. Sarah, 25. New grad income, $45, opens TFSA and invests $250/month in VGRO. Result by age 65. $880,000 total invested, $120K growth, $760K plus in interest alone. Case #2. Ahmed, 40. Family man, income, $90, opens RRSP to lower tax bill, invests $500/month into VGRO, gets $1, $200 tax refund yearly, uses refund to max TFSA, hits $1 million net worth by 60. Chapter 14. Side hustles plus investing equals rocket fuel. If you can earn just $500/month extra and invest all of it, that's an additional $1.50, $2 million over 30 years. Ideas for Canadians. Freelancing, selling on Etsy, teaching on Skillshare, delivery driving, Uber, DoorDash. Print-on-demand t-shirts or journals. Money earned is great. Money invested is freedom bought. Chapter 15. Investing through a recession. Yes, markets crash. But here's what history shows. 2008, S&P dropped 50%. fully recovered in 2.5 years, 2020. COVID crash, 33% drop, recovered in 6 months. Every major crash has been followed by a higher high. If you invest during a downturn, you're buying on sale. Rule: never sell in panic. Crashes are opportunities, not endings. Chapter 16. FIRE movement in Canada. FIRE. Equal sign financial independence, retire early. Here's how it works. Save 50% plus of income, live below your means, invest consistently in ETFs, reach freedom number, 25x your annual expenses. Retire early or work only if you want. You don't need to retire at 35. But imagine working because you want to, not because you have to. Chapter 17. Your 10-step wealth building blueprint. Let's wrap everything up. Here's your stock market beginner blueprint, Canadian edition. Track your expenses for 30 days. Pay off high-interest debt. First, build a $5K emergency fund. Open a TFSA, then RRSP. Start with ETFs like VEQT or VGRO. Automate $100, $500 monthly contributions. Ignore noise. Think long-term. Reinvest dividends. DRIP. Increase income and invest the difference. Stay invested through good years and bad. Let's be honest, you're not watching this because you want to try investing. You're watching because you're done being broke, because you're sick of stressing over bills, because you want to do more than just survive. And now you know the path. You don't need thousands to start. You don't need to be an expert. You just need to start now and never stop. Because the only thing more expensive than investing is not investing. So here's what I want you to do next. Like this video, it tells YouTube this content matters. Subscribe to Financial Mo, new real Canadian finance videos every week. Drop a comment. I'm starting today. Let's build this movement together.